Hi, Ron. It's Stuart here. Welcome to the prop trade. And we're going to or have a look at trading the close into the US closing session. Remember, the US is closed tomorrow. It's Juneteenth holiday tomorrow. So it's Friday, um, cash stock markets are closed. Obviously, markets will still get made on the derivatives side of things. But I just want to start with the dollar yen. We've been rallying all day. This is a chart next to me, dollar yen. 160. You see the top of the Bollinger Band there, 161.40, 85. We got a top here the last 20 minutes or so, 161.80, and it looks like there's been some sort of obviously we've got some potential intervention. We took us down to 161. We'd actually taken a speculative short up here, as you can see down here on our small position here, but it was still a 900 point return. Just $9 and all, 0.05 of 0.5 mini lots open on dollar yen. So it's been rallying all day. If we look at the hourly chart, stronger dollar following Walsh's first press conference yesterday. Massive move on the dollar through 161 around about the European close. It's gone higher, as I say, 161.80, and it's just been spiked low, but we're still 161.57 as we speak. We just leave here. We just stay here on the dollar crosses because. Sorry, let me just make myself a little bit smaller. There we are. Stay here on the dollar crosses because we've seen a much stronger dollar since last night. This is last night, the Fed announcement. Excuse me, I've got no drink with me here. We've the Fed statement much more hawkish than expected, quite short as well. And then Walsh came out his press conference with these five task forces to look at the data feeds, in particular how inflation is counted as well, and go back to first principles. He kept talking about a family fight, getting people from within and without of outside of the Fed to join these committees, looking to get them going within the next 2 weeks and having them reporting by the end of the year. But 9 of the 19 members, policymakers, looked at expected higher rates by the end of the year. Obviously no change yesterday, but it was a hawkish tilt, and the dollar rallied significantly on that. This is the 7 o'clock, this is the 8 o'clock candle, big old move here against the weaker yen. But we look at the euro, similar time frame. Move to the downside, continuing to decline today, under 115, 114.45. So we're at day lows. Euro, Aussie, even the Aussie that's been really strong against the dollar, went into the .70 area. We've recovered that today, but down again, not quite the lows of the day, and just above 70 at 70.11. Sterling down and under the key 132. Sterling got that key multiple by-elections today, but the key Makerfield by-election could influence policy and even ultimately change of Prime Minister here in the UK. But we'll see how all that pans out. But sterling, similar to our candles there as following the Fed, and then a big move down this morning, and then we've continued into 132 and lower. The data today, if we just have a look at Thursday's data, has been also quite interesting. This morning, on the back of that, where are we? Thursday. On the back of the on the back of the weakness of dollar, the cable rate, we had earnings spiking up. We had jobs numbers out of the UK this morning, and claimant count rising more than expected as well. Although last month was better than expected was revised lower than expected. So jobs, a few and far between, new ones, but those with the jobs, particularly those getting bonus in their jobs, their earnings are holding up quite well. Just again to run out while we got the calendar here, no change from the Swiss National Bank or the MPC the Bank of England, the Monetary Policy Committee. There was a shift, though. We were expecting possibly 9-0 vote, or certainly 8-1. It was 8-2, so two members of the MPC looking to raise rates from the Bank of England. So a hawkish tilt from the Bank of England as well. Didn't help sterling at all. Certainly there against the stronger dollar. And the Philly Fed was a tad better than expected, but much better than last month. That negative reading was, as we said at the time, was it an outlier? So strong month again this month. So it looks like April, the May number might have been a bit of an outlier. These manufacturing indexes, the Philly Fed, the Empire State, the Richmond, we are quite volatile, but we return to positive territory for the Philly Fed. See how the rest of the summer looks for the manufacturing index. So that came in at 10.3, so positive numbers. And the unemployment claims remain, really historically very low, 225,000 this week. This week for the weekly claims. Really nothing to the stability of the jobs market continues to surprise, but obviously it's been a low demand, low supply situation. So therefore, the non-farm payrolls numbers have been coming down and not spooking markets as the crackdown on immigration has added to that labour pool diminishing quite quickly. So overall, sort of a sideways day. Stock markets have bounced quite significantly from 2 days of selling, and the higher yields and the stronger dollar continued throughout today. So that's continued to move to the downside. If we just look at the indices, they had a sell-off yesterday. Should use the Nasdaq. Does that differ? Actually, let's use the S&P because it's the key one. So yesterday, similar move for the stock markets as the dollar improved. Stock markets sold off into the 200-hour moving average, but we've recovered since then, and we're back to the 7,500 level. So it's had a positive day today. US stock markets. Remember, they are not open tomorrow, so this is a wrap for the week. Everyone's favorite stock at the moment was up, down yesterday. SpaceX was off 5%. I think it's off about 6% today, but the Nasdaq is up 1%. Best performing again remains the S&P, I should say. The Nasdaq, 30,400. There's our new daily high. You can see on the hourly chart. So that's our hourly trend, which we've been under. We'll look at what we can do as we run into the open. Any opportunities, but that's trending higher. So we're looking to take long trades in the shorter time frame potentially, but just be aware that if we are taking shorts, we're against the higher trend to the upside. So 30,400 for the Nasdaq, and the Dow 51,665. We've been playing with that in the last few minutes as well. So just let me open that up for you on the 5-minute. We were short, then we were long. We closed our long out, but it's we should have kept that running. You see, that's positive there on the 5-minute. Let me just open that up. Sorry. There we are. Look, that was going long, but then we looked to the left, and you can see we had a bit of a triple bottom here where we'd got to. So we bought it, and we cashed out on the upside at first target there. Now the system did, because it was only a one position, long position. But that may turn around again. But it looks like the floor is in, so we might be looking to add to long positions there. 51. That's still moving. Oh, that's still moving. So that's trending. That's gone through the 50 period here on the 5-minute. So look at our, if there's any triggers on our moving average setup. That would have already gone long. No, that's trending long. So moving higher. We could get back to this zone. So the high there, 30,635. We'll see. There's obviously a lot of activity. This 10-2 candle can be quite volatile. So watch that. That's still trending low. I'm not going to join that rally to the upside. Be more interested in potential mean reversing on that. On the MACD and SAR setup will be quite strong. Oh, that's interesting. That's just flipped here on the S&P in the last 5 minutes to the S&P, not the Dow. So that's flipped in the last 5 minutes. The Dow similarly has flipped, and the Nasdaq has also flipped. So they've all gone long in the last minute. So let's see if we can take this higher as well. So let's just buy a little Nasdaq position on that cross there. So there's the cross, the previous 5 minutes. We should have got in earlier. We'll play this into the open. So let's just open our open position. So we've gone long the Nasdaq, and let's just stay with the Nasdaq here with this trending strategy. So our stop loss really, below that candle, below that wick, not as low as there. So 33.46 for catastrophic 33.46. So doing we 3, 4, 3. Did we say 3.46? I can't remember what we said. Below that wick to start off with. 3, 4, yeah, 3. 348. Let's call it 348. 30,000. 3. That should be your fill. 3, 4. So there's a stop loss below that wick. We'll see how that transpires. We'll track that up as that plots out. So Nasdaq, we've gone long. It's been a tech-led rally. Dow's rolling over in this 5 minutes, and the S&P's rolling off. So Nasdaq continues to play against the other two. So we're in the money on the Nasdaq to the upside. So as usual, guys, if there's anything else you want to have a chat about or talk about, let me know. I know it's late for you guys in Asia, very late. It's late here in Europe as well. But let's see. Remember, this is the close of the day. So let's see how we get on. Say currently in the money. That might turn around, given the other two have turned around. But it's the Nasdaq is leading stocks into close today. Elsewhere, gold obviously got hit with the stronger dollar yesterday. We just go back to the hourly candle. See the move down. Just take this up to the hourly candle for gold. As we saw with the indexes, similar, quite aggressive move on gold, and we're below where we were yesterday. So gold's weakening again, 4,215 at the moment. So a rally into close a bit yesterday, but couldn't break away from the 4,325 high here through the early Asian session, and then declined through the European session, and it's declined during the US session as well. And we're now at day lows here for gold, and the gap from last Friday, interestingly, has been taken out as well. So we're back to Friday's lows here at 4,003. And so another week. We just go to the daily time frame. Another week, relatively week for gold. So this is Thursday. There's Wednesday's down, up Tuesday, up on Monday. So we're below Monday's open and back at Friday's close. So another week for the gold market. We just put this on the weekly time frame. You can see, continuous weeks to the downside. Since the middle of April for the gold market. 4,000 was calling last week. We rallied quite significantly on Friday, didn't we? And looked like we were going higher again on Monday, and that didn't happen. So there's Friday's. Thursday's rally. Friday's flattening out from the dip we'd seen earlier in the day. As the memorandum of understanding was chatted about on Friday, but down yesterday and down again today on the gold market. Let's just go back to our live chart index and first sign of weakness, and I'm going to close that out because it's the other two are 5 minutes. Oh, that's all right. No, okay. So let's just let's change the stop loss to our entry. 34.21, so we can then just watch that. So if we edit 421, 422, call it, because obviously we may get a bit of volatility into the close, but that's running, so we can't lose on that one. And probably got a wee bit too tight, but this is purely demonstration purposes, guys. Remember, completion of that candle, really, the stop loss should be down here somewhere, or here at the moment, or certainly through that level there. But we've broken ahead of these highs, so we may come back some profit taking in the end of the day. But we continue to move higher, and I say remember the cash markets are closed tomorrow, so the derivative markets will continue to trade anyway. Let's have a look what's going on elsewhere. Not a great deal. So the story remains the Warsh's first press conference. Warsh's grabbing the Fed by the scruff and creating these task force to look at evaluating some of the data that they're using for their top planning as they go forward. There we are. So unsurprisingly, that's taken us out as we come into the open. Remember, I said the 8:50 here in my time, or the 10 to the hour candle can be really volatile. There's a good example of that there on the Nasdaq taken. I think did we close in the money on that one? We did just about 1 cent. We were up 25, weren't we? But winning trade. The previous one we saw there, we'd caught the yen short. Interesting to see what's happened there, if that's gone back the other way. But that looks like a potential. We could have kept. My stop loss is down here. I'm sorry, my target was down here, so we're still going short. But 161.85 in new. I'm going to actually just plug this in and see when we were last up here. 161.35 is where we are at the moment, but 85 is where we were. And that, oh, look at that. There we go. Surprise, surprise. It's a top we saw June the 1st, July the 1st, I should say, 2024. We were at that high. This is this week, those 2 weeks there, and we're there again. And it's instigated a bit of a sort of selling action, some algorithmic selling action, no doubt. But there's a great example of the weakening yen over the last 6 weeks. So 1, 2, 3, 4, 5, 6th week, stronger week this week. Bank of Japan have met, Fed have met. Upshot is a continuing stronger dollar yen pair, and some shorts playing out these highs, but the trend remains very much to the upside. That's the weekly chart. That's the daily chart this week. Another strong week for dollar yen. Friday's turnaround, Monday, Tuesday, Wednesday, Thursday so far. See what Friday looks like to close the week out, but the trend continues to move to the upside. Last time we saw intervention at 61.50, and then again at 57.80. Took us down to the 155 area, didn't it? Looked like we were trying to get back to the 200-day moving average. It's all just been wiped out, and we are even higher again. Obviously, see what the Bank of Japan does tomorrow when they're at their desks in a few hours to close out the week. Bearing in mind that US commercial banks are closed tomorrow for the Juneteenth holiday, but obviously the Federal Reserve is still watching and looking and coordinating with their colleagues and speaking with their colleagues in Japan, no doubt. But if we look at it's not just against the dollar is very strong, but the yen remains weak. If we look at the yen against its major crosses here, we've looked at the dollar, euro, yen, euro down yesterday, but still overall the trend is to the upside for euro, yen. Sterling, 213, strong couple of weeks, sold yesterday. Really, strength of the dollar that's pulling sterling and euro down. CAD's been weak against the dollar as well, still weaker against the yen, and Aussie continues to hold up. and we're trading at 113.20. Aussie yen back up again today. Crypto also took a hit yesterday. Bitcoin leading cryptocurrency under 63,000 again today. So took another. Look at the same hourly candle pattern from the reaction to the Fed yesterday. There's 7 o'clock candle yesterday. Continue to decline. And then leg lower again around the European close today into 62,000 again today. Bounced a little bit in the last couple of hours, but the trend remains to the downside. This week, I've been lifted on Monday. All of those gains have been taken out, and we're now lower again. And again, if we look at the weekly, we'll do all this again tomorrow to wrap the week up, obviously, but we look at the weekly chart. It's been from a 80,000 level. Last 6 weeks have been poor for Bitcoin as well. None more so than that first week of June. And we are closing out the second week of June or third week of June. And we are weaker again. 60,000 has been our floor. The trend remains to the downside. They're on the weekly. These are weekly charts as calendars charts as well. We had that flip at the beginning of June to the downside. So the trend remains biased to the sellers. This little mini rally last week is getting sold off again. So 62,000 becomes key on a shorter term basis. So watch that tomorrow. That low there, 61,750 tomorrow. Is it going to get tested again? We shall see. Let's see where we go from here. So back to the indices and back to our closing trades. Where were we? We were doing the Nasdaq. We were running through the 5 minutes, weren't we? We were still long there. See, if I hadn't pulled that stop loss up too aggressively, would have still been in that one. So that would have been the trigger. We'd have we got a bit aggressive there. So if we'd left it there, actually, even if we'd left it at the second candle, we'd have been taken out as it's rolled over into close. So you can see the effort, the impact of the the 2050 or the 10 to the close hour candle is sort of lost a little bit there, but it does honestly 2050 or 10 to the hour. The US close. Watch it if you don't believe me. They move quite consistent. If we bring it out the minute chart, you might see it a bit more. There we are. There's the 50 candle. It happens most days, not every day, but most days. The 10 to the candle, and it's across all. There's the 50 candle there on the S&P, and that's continued to move higher. And the Dow, they are some big volatility. Say 2050. It's just options expiring, positions getting tidied up as we go into the actual practical physical close of the market. So some people say it doesn't exist. Watch it. If you're trading on the minute charts, I'm sure you're aware of it. But anyway, there we go. So we had a successful trade. It was only a cent in the end. So what's happening now? We're still biased to the upside here as we run into the open. On our this MACD scenario, but chopping around quite a lot. Top looks like 51.66. Nasdaq continues to lead, but we're off our highs, but that's still looking quite chunky. Let's have another bite of that one because the blue is ticking up. This might be again. Should have perhaps faded this. It's the 1 minute, you fool. Right, sorry. That's 5 minutes still strong. Okay, still strongish, but we'll see where that finishes as we go in up. So we just re-entered that. We just opened the long position. That was a 1 minute chart. You can see the 1 minute was actually. Looking at that might have been a short. No, that's still that. Well, that's still short from the 50. That's the impact, but we gain all of that back. So that's going to flip in a minute, and the 1 minute will go long. So I'm happy to leave that. Actually, let's split the difference. Let's play the 2 minute game, and that's still long. So I've re-entered basically on that one. So we're long the Nasdaq and a little bit out of the money on that one. That's the 5 minutes. See where we finish some. Stop loss. So let's 33.98. Let's put the stop loss down there and see. And let's just run this one. 30. What was it? 398. Below the wicks of those previous candles. That's probably a little bit. Let's make it 94. Under 5. Get a bit more breathing space. There we are. And let's see where we are. It's there. It's already rolled over. Not to worry. So, say Friday, from a market moving point of view, from a data point of view, little major data tomorrow. We have retail sales first thing out of the United Kingdom. Very little. Obviously, the markets and the world remains focused on the longevity of this memorandum of understanding. Israel still talking about not laying down their arms, remaining the unknown source here. Trump clearly agitated with Netanyahu. And the Iranians, internally and externally to their Gulf partners, sort of reading this as a major win. Still got their missiles, the nuclear material. Still no talk about that. There's nothing in the memorandum of understanding about the nuclear material. It's still in Iran. It's still there. It hasn't been taken out of the country. And reading, the full statement was read out by a US official, the 14 points, literally just 14 points, 2 sides of paper, relatively short. And obviously, clearly, you could read into the end of the 60 days that, the Omanis and the Iranians could some sort of deal about actually some sort of tariffs for shipping through there. Trump insists that isn't going to happen, but we'll see. Time will tell. Things have changed quite significantly since the 28th of February. I just haven't showed you the oil chart, have I? Ironically, we've been stopped out on that one. The oil market, which remains obviously centre to everything, tanked quite significantly. I'm going to go back to my Bollinger Band charts. And just take this up to the hourly chart. So continuing to move. There's our move from the Fed yesterday as well, down significantly under $80. Sorry, how am I talking? It went the other way yesterday. On the US Open, the 5 o'clock, on worries about the deal not clapped in, and the big drawdown we saw in inventories yesterday as well, both, and the strategic reserve at 1983 low. So it hasn't been this drawn down since 1983. 340 million barrels is the strategic reserve. That will obviously get replenished, but it's going to take a while. It's going to take some months, not only from US production, but from imported oil. And then the official drawdown was another 8.5 million, or 8.3 million barrels. So we saw a spike yesterday, but we continued to decline today. And then this afternoon, we have bottomed around about the European close. So the last 4 or 5 hours, we've been higher for Brent. So we're back to the $80 handle. It's still obviously very much under the $100, all the $100 even on this chart now, but under $80. So we closed the week under $80, and obviously US trading is closed tomorrow. But we found support at the 200-day moving average here, technically 78.95, and moved even lower. So we moved lower today, 77.25, but we're recovering in these late trades on the derivative markets. There was our 27th of February. We haven't seen that on our charts for a long. Been able to show that on our charts for a long time, have we? But we're back to March levels. March the 1st, we were $80 a barrel, and that's where we sit around now on Brent, and WTI 76.50. So again, the spread between WTI and Brent, the spread between the physical and the derivative market is also narrowed. Cooling, but not out of the far from out of the woods. As I think it was Saudi Arabian tank, 3 Saudi Arabian tankers were the first to get out earlier today. So the whole Strait of Hormuz is starting to release its oil that's been stood there for 4 months. But it's going to take a long time before things are back to normal. And indeed, if that happens, but the next 60 days, again, see what happens. It takes us through June, end of July, end of August. End of August takes into September. Beginning of September is that key Labour Day, September, and then we've only a month or two before the November midterms for Trump. So very much in focus, the political situation at home in the United States, and obviously for Israel as well. Netanyahu potentially out of office by October if polls are to be believed in. Some of the polls I've been reading out of some of the Israeli press, but obviously that's still a way away. But at the moment, dollar remains very strong. Stock markets have bounced back today from 2 days of sell-off. Let's leave you with the Nasdaq. There's a strong day today. There's our hourly trend line. There's the hourly chart for the Nasdaq. We're closing towards the highs of the day. S&P 7,500, the Dow for 51,600 as we close trading for Thursday and for the week for the United States as well. So let's see where we are. Cash market 7,507 on the S&P 500, and the Dow is the Nasdaq 100 up 700 points as well. The detail in the deal was very, very weak, really, wasn't it? So stocks up, oil down, dollar remains very much on the front foot. So I'll see you tomorrow. We're going to trade it was going to be the US Open tomorrow, but we'll do a wrap up around about mid-afternoon tomorrow. So take care, everyone. Have a great evening. Enjoy the football if you're watching it, if you're following the World Cup. I certainly am. England played brilliantly yesterday in the second half. First half was a bit nail-biter, but there we go. That's the joys of the World Cup and following your team. All the best. Take care. Be safe.